Hey everyone, welcome back. Ready for another deep dive.
Always ready to dig in. What are we looking at today?
So, lots of buzz about Nvidia's stock after the election, right? Jumped over 4%.
Yeah, I saw that. Big move.
We've got some market analysis here. It's focusing on options trading. And guess what? It's suggesting that this surge might be more than just the market loving the new administration.
Oh, interesting. So it's not as simple as, new president, everyone's optimistic, buy Nvidia stock.
Exactly. There's this whole options market angle. And specifically, something called zero DTE options.
0 days to expiration. Those are getting a lot of attention lately.
Yeah, it's wild, right? The analysis suggests they're playing a key role in all this.
Well, you see this initial 4.07% jump, right? A lot of folks just chalked it up to, well, the market likes what it sees, new administration, maybe things are looking good for tech, pro-business sentiment, that kind of thing.
Right. Makes sense on the surface.
And if you dig deeper, look at what's happening with these 0 DTE options, the picture gets a bit more complicated.
Okay, so for our listeners who aren't familiar with zero DTE options, what are we even talking about here?
So 0 DTE, it stands for 0 days to expiration, meaning these options contracts, they expire on the same day they're traded.
Whoa, that's risky business. Sounds like gambling almost.
You could say that, yeah. It's very short term, but it's become super popular, actually. A huge chunk of the options market volume is 0 DTE now. Traders using them to make these quick bets on tiny price swings. And that brings us to this concept of implied volatility, or as everyone calls it, IVOL.
Yes, IVOL, the fear gauge. I've heard that term thrown around, but I'll be honest, it always sounded kind of intimidating.
Yeah, it can be a bit of a head scratcher. Think of it this way, though. Implied volatility, it's basically baked into the price of these options. The higher the IVOL, the more expensive the option's going to be.
So higher IVOL equals more fear.
Exactly. It reflects uncertainty. Now, before the election, we were seeing unusually high IVOL, especially for put options on Nvidia.
Put options. Remind me again.
Right. So put options, they're bets that a stock's price is going to go down.
Ah, got it. Bets against Nvidia. And our analysis here, it highlights a whopping 46% put option premium for Nvidia. That's a lot of people betting on a drop.
Yeah, and that high premium, it tells us people were really nervous. They were willing to pay a premium for the right to sell Nvidia at a lower price, just in case the election outcome spooked market.
Spooked how?
Well, the assumption was a Harris-Walz win would be bad news for tech.
Interesting. So when that didn't happen, relief rally. Boom, Nvidia goes up.
Exactly. But here's where things get even more curious. The source points out that Nvidia is now sitting right at its predicted price ceiling, $145.
And yet IVOL is still high. I don't get it. If it's at the ceiling, what are people worried about?
Right. That's the million-dollar question. It suggests traders are still hedging their bets, even with the price up there. Maybe they're using strategies like covered puts or protective puts, basically locking in some profit, but still guarding against a potential downturn.
So it's not just leftover election jitters. Something else is making them nervous, even after this rally.
Exactly. It could be concerns about, well, upcoming policy changes that might impact the whole tech sector. Or maybe, who knows, maybe there are whispers about some Nvidia-specific headwinds that, we just haven't heard about yet.
Makes sense. So big takeaway here, Nvidia's at its predicted limit, but that high IVOL, particularly on those put options, it suggests traders aren't convinced this rally's going to last.
Yeah, they seem to be anticipating a possible dip. Now, if we zoom out and think about the bigger picture here, this Nvidia situation, it could be a microcosm of the broader market sentiment right now, post-election.
So we're seeing a rally, things look good on the surface, but underneath, there's this current of uncertainty.
It does seem that way. It makes you wonder, is there a disconnect between, the apparent confidence and the actual underlying sentiment? Are people truly bullish on the future, or are they just waiting for the other shoe to drop?
Interesting to consider. What do you think? Is this a temporary blip, or is this hedging behavior? Is it a sign of deeper anxieties about where the market's headed?
Hard to say for sure. I think the next few weeks will be telling. Keep an eye on that IVOL. If it starts to drop, well, that might signal that this rally is losing steam.
Great insight. So much to think about. Started with a simple stock jump, ended up in this fascinating discussion about trader psychology and the hidden forces driving the market.
That's the beauty of a good deep dive, runner.
Exactly. Always more to uncover beneath the surface. Thanks for breaking it all down. And to all our listeners out there, you heard it here. Pay attention to that IVOL. See what story it tells you. Until next time, keep diving deep.